well. So you can. And we are live on Oz Property Investors. We bring the big names, and tonight it's Joe and I. So we're going to have heaps of fun. How you going? Shit, that was fucking loud. The neighbours are. Oh, I just swore. My bad. We just got cancelled on YouTube. Shit. How you going, Joe?
I'm good, mate. I'm good. Not as high energy as you. Clearly, this is intense. I'm fantastic, mate. It's all happening.
Yeah, it is certainly. We got the RBA yesterday, just increasing rates again, spoiling the fun, like taking the punch bowl away. Why do they have to do that to us, Joe? Just why? But we're going to do a bit of. There you go.
Yeah, well, as I said, we're going to talk to what interest rate, what this all means, what the government's trying to do, and how it all affects. But I'm excited for tonight, mate. We are going to do a data deep dive into some mystery suburb. I feel like I gave it away when I said the location. So we're going to do a data deep dive into the wild west of Melbourne, which is Geelong. Some call it the Wollongong of Melbourne, and they.
I've never been there, but I'm categorically saying that you cannot. Yeah. I mean, yeah, but no, you could say that.
You can't get that.
So, we want to see questions, comments. And if you're watching this later, we love a like and we love all that stuff on YouTube as well. So, I'm gonna bring up a bit of a spiel on. So we saw the RBA increase the cash rate yesterday from 0.8% to 1.35%, a 0.5% increase. And what that meant for people on a $500K mortgage is $499 a month. I was reading that. So you can do the numbers. If you've got $1 million and it's basically $1,000 a month. So it's not necessarily small change. So, but what is that? Where do we? I'm not going to get my crystal ball out. As I say, it's in the shop getting fixed at the moment. But what I wanted to share, Joe, is, and while I'll get this up, what are you kind of seeing out there in terms of, are you able to negotiate more on properties at the moment? Like what are you experiencing?
Well, yeah, it's interesting. I was actually speaking to a property manager in a different in one location, and she was like, "I actually use you, Joe, as a barometer for the Australian market because I am in." I buy property for clients in Victoria, New South Wales, Queensland, WA, and Adelaide. So it's kind of interesting. But what I'm starting to see is the properties that shouldn't be on the market that shouldn't be getting amazing prices are staying on the market a little bit longer. So the really, really good properties, the properties that have the right layout, that have the owner-occupier desirability, there is still a high demand for those ones. But I'm starting to see that those types of properties that aren't necessarily high demand are losing out. They're just not getting people wanting to buy them because they're like, you know what, actually, I don't need to buy these rubbish properties. That's kind of what I'm seeing on the ground.
Hey, my bad. Just trying to figure out how we get rid of our. How do we get rid of our?
That one.
Oh, yeah.
Do you want to get rid of that little ad at the bottom there?
Yeah. So, damn it! I didn't pay for the upgrade.
So what exactly are we looking at here? Australian 3-year bond yield overview. What does that actually mean what does it actually mean? What's a bond yield got to do with anything?
So bond yield. You put me on spot here. I don't necessarily. I know what it represents, but a bond yield, I suppose, is what you could invest in and get that particular return. But what it really kind of represents is a yield curve, where an expectation of where kind of interest or the cash rate is likely to be in a couple, or somewhat of an expectation as to what it looks like. So if we see here at the moment, the 3-year bond yield and for Australia is just a touch under 3%. So that's kind of forward sort of looking, and it's just, I think it ticked up there a little bit. So if we look, that's on a 15-minute time scale. So if we look at it again over a 1-day kind of time scale, so you look, the trend is it hit back in mid-June, it hit over 3.5%. If we go out, scroll even further, look at that. During the pandemic, it was absolutely sitting on a floor. So the expectation back in sort of mid-20 was sitting at what the RBA cash rate was now. And so this is sort of giving some of giving some indications of where the cash rate was likely to sort of sit. And you could sort of see somewhat you could see it in the tea leaves that you were sort of seeing around January, it was at 1%. and then sort of February got to 1.5, and then you sort of start to see March it got to 2.5. So you sort of see that because of that that's even before the RBA started increasing rates. So you could see that eventually that was pushing up, and the RBA sort of said, well, we can't. Inflation's the bond yields increasing. We can't continue to necessarily hold rates where they are. But interestingly, in the last kind of 3 or 4 weeks, or 2 or 3 weeks, it started to come down quite quickly. So you sort of say, yes, it's peaked. There, you could argue it's peaked, and maybe, who knows, it could go back up. But that's just interesting. So that's kind of, I don't know, does that explain it well enough? So basically, it's an expectation of where potentially the cash rate may be in around 3 years' time, looking out.
3 years' time.
Yeah. So you're sort of saying 3%, which, and you can see it can change quite quickly though. In that couple of weeks, it's come down over 0.5%. So it's not to say that it'll stay at 3%, but it may shoot up again. It kind of it really depends on. I think a key thing will be the second quarter's inflation, which comes out in about on the 26th of July. So if that sort of, I think they're predicting about 7% CPI year on year for the second quarter. If that sort of is any higher than that, you may see this 3-year yield start to shoot up. The other thing I like to look at, I'll stop sharing that just quickly. And so talk to me, are there any kind of locations that you're surprised, or give us a state if you want to, like, or any cities that you're surprised that are getting easier to buy in? Is Adelaide still hard to buy in, Joe? Or what do you?
Adelaide is very hard to buy, and I posted before just previously about Adelaide being one of the tightest rental markets that there is. I speak to a number of my property managers, and every single week I'm like, hey, we find a property, we go into contract on it. What do you think that this property is going to rent at? And they'll say, 480. And then once we go under contract, the contract's exchanged, blah, blah, blah. Great. So where are we at? Oh, we're at 500 now. And then it just keeps going up and up and up because there's just no rental stock available, which is going to drive people and demand there. So I'm finding that in tightly held markets, it's still tightly held. One thing is also to mention is that, in Sydney and Melbourne, if you've got $2 million or $3 million of debt, 0.5% interest rate is a bit of a big deal because that's a large amount of capital. But what happens is, what we start to see is people start to say, you know what, I don't need that $1 million property. I still need a place to live, but I'm just going to go for my $700,000 house or my $500,000 house instead of going and stretching myself to go for that $1 million. So when people are like, oh my gosh, the market's going crazy. Well, yeah, for some segments it is. For people that are overpaying and getting emotionally invested, it's probably not the best thing to go for the luxury high end right now. But for everyday people, we are starting to still get more demand because people still need a place to live. I like to say we buy everyday properties for everyday Aussies. Like there's no way to change it. People have to live. And if they move into a location, like a move out, they've got to move somewhere. So yeah, I'm still seeing a lot of demand, but it's definitely getting a lot more agents having a conversation now around, okay, well, I have a feeling that, the things are shifting. So it's an interesting one.
Yeah, and that's that kind of talks to the other thing that I've sort of been looking at a little bit recently is this RBA rate indicator, which this is not a 3-year kind of. This is more what is an expectation will happen in the next meeting time the RBA meets. So you can already see there straight away. And I mean, there was no change on that trading day, which is not because they're now measuring on what the expectation on it increasing another 0.4% at August meeting on the first Tuesday of August. And so we can already see the day after they raised the rates, which was the 4th of July. Sorry, it was the 5th they've raised it. So you can already see there 96% chance at the next meeting of going another 0.4% increase. And it dipped a little bit to 94%. But you can almost sort of say that there's and it does jump around a little bit. Like sometimes I see it jump around 5 or 10% day to day, but there's sort of already the market's pricing in a 1.75% cash rate in August, which is interesting.
Mm.
And you
Yeah, I
even
tend to stop listening to the updates that come out for predictions when the RBA says in what was it, March 2022, we are not going to touch rates until April 2024. So we won't touch them. We're just not going to touch them. And then in June, all of a sudden in June they start going up. So I don't believe any of it. So I don't look at any of those prediction things because it's all just they have no idea. All they're
well,
trying to do with this.
what
Yeah,
that is
go
though,
ahead.
Joe. The interesting is this isn't kind of experts. This isn't like 40 people sitting around in a room saying, "Oh, they're not going to touch it." This is actually this is people trading the market. So this is people putting in sort of trading.
Putting
So
where their
these aren't
mouth
people.
is.
Yeah, exactly. So if that's what I mean, these aren't people just saying, "Oh, like I think it'll go up." These are people that are saying, "I'm putting some money into this contract," and saying, "Well, this is my expectation. I'm going to put some money where my mouth is." So it's
Yeah,
trading a bit higher, and I think it wouldn't surprise me. Depending, it all comes down to that inflation number. I think in late July, but if we get
yeah.
to, and we want to get to the data deep dive, but if that inflation number doesn't look too crazy, if it's kind of, and 7% is quite a lot. But if it's kind of comes in a market, comes in on expectations, I think they may in September just say, look, we've raised it now 4 meetings in a row. Let's just let's sit back and let's reassess, at least for one meeting, maybe two. But I think I'm not saying that it'll stop at 1.75, but maybe it might. So who knows? Anyway, quote of the week. Let's go. Let's do it.
Yeah. Well, one thing to mention as well is the reason they're raising rates, it's a good thing. It's to stop inflation. Inflation is the thing that's eroding all our dollars and making them less valuable. So they have to raise the rates. So it's not necessarily a bad thing for this to be happening. We've just got to stop the inflation, and that's how they're going to do it. As soon as that inflation number starts to go down, then the interest rates will start to level out again. Okay, mate. What is your quote of the week?
So on that point about kind of interest rates and just tougher times, mine is when everything seems to be going against you. Remember that an airplane takes off against the wind, not with it. By Henry Ford.
There you go. There you go. Nice. Why do you like that one?
Well, because for me, I see, I look at the Facebook group quite a lot. I mean, those people who knows, but and I just see what's going on in the media and all that sort of stuff. And people talk. There's a bit of fear mongering and a bit of a lot of uncertainty happening. And I just think I sit back and say, well, okay, yes, there is a lot of somewhat negative sort of information going on, and people saying, well, uncertainty. And I just think, well, where is there opportunity out there in this particular market? Because I think people have already started to somewhat feel that it's not okay, or not okay, but it's starting to just become a little bit normalized. So the moment that sort of ticks around, you'll start to see that it'll start to get harder negotiating and buying again. You'll start to see, I'm not saying prices will start going back up again, but you'll start to see less fear and less kind of uncertainty just in the general population. So I think to me, when things feel really hard, maybe that's actually the time where there's fantastic opportunity. And it's not to say you should go and buy it tomorrow if you're living paycheck to paycheck, but that's why I love it. What about yours?
Yeah, my quote of the week is I guess we do a lot of strategy and property plans, and we build out a 30-year plan for people. And a lot of what I hear right now is people thinking in the short term. They're like, oh my gosh, interest rates, it's 0.7, it might be 0.75. Well, my quote of the week is you can't build a long-term future on short-term thinking. Property is a massive long-term game. That is how you make money into it. If you can get a property where you put down, let's just say $100,000, and you can buy a $500,000 property, and then it grows over 10 years to $1 million, you've leveraged your $100,000 to be able to get access to 500 now here we go, an extra $500,000 of equity. So you've
I was thinking the numbers. An extra $400,000, so 500 total. You put in 100, you got so 500 total.
Yeah, and like long term, it's it's a game of numbers, and we build our plans out on 5% growth, and you can achieve a lot within that. And a lot of the markets that we're buying in have 7, 8, 9% growth. But if you can still make your numbers work, if you map out everything at 5%, then you're doing pretty well, because let's ignore the fact that we had 21% annual growth for the property market last year. Anyway, tonight is a data deep dive into a spectacular little location called Geelong. So we are going to unpack a whole heap of that. We're going to talk about supply and demand. We're going to talk about data. What else are we going to talk about, Jeff?
I think we're going to unpack a few locations. So stay tuned for some suburbs because Geelong isn't just a suburb. It is a suburb, yes, but it's also a large city. I think it's definitely top 20. I'd say even top 15 of Australian cities in terms of population. So yeah, excited to just share that and just give some insights, because you actually know it very well, and I feel I know it much better over the last couple of days. So excited.
Let's do it. Okay, well, before we do that, let's jump into our sponsor.
Commercial property offers the highest cash flow in Australian property investing, offering exceptionally higher yields than residential. Now, we're talking 8 to 10% net yields. That's cash after all expenses, not this 2 to 6% gross that we see in the residential space. So for those that are starting out on their commercial investing journey, it can be exciting, but it's also a step not to be taken lightly. The expertise of a commercial buyer's agent can pay dividends to help you secure that high cash flow and high growth potential property. And this is why we recommend Steve Polisi of Polisi Property. With over 6 years experience in the space, Steve has over 1,200 property transactions under his belt. He has seen it all and knows the best locations right for growth. In a previous life, Steve was a chartered mechanical and structural engineer, so he draws on his mathematical and analytical skills that he's developed to break down what works best in commercial property. As with engineering, same goes with commercial property. It's based primarily on the numbers. So if you're curious about diversifying into commercial property, you have access to $100,000 in cash or in equity, book a call with Steve today and find that perfect asset for you.
It's a bit awkward. There he is. I was on mute. I was talking away, and I was like, "Oh, yeah, that's a bit smoother than last week." And commercials and interesting. We've got a special thing coming up next week. We've got both of you in the boxer ring, so tune into that. But tonight it is Geelong. So bring up
what?
Oh, I told you about this. Oh, we've got a commercial versus resi, mate. You're spoiling. I was trying to see. Yeah, you know, yeah.
Happy days. Commercial versus residential. Let's do it.
Joe and Polisi in the ring. I'd be worried if I was Joe. I'm a little worried. I'm worried for him. Anyway, so Geelong. Should we bring up the Prezi with the kicking goals?
Kicking goals. Let's kick some goals. Yes, the Geelong market. So what we've done here is essentially made a little slideshow presentation, and most likely, I know our slideshow presentations, they don't really turn into slideshow presentations. We just end up going in, clicking out of things, whatever is relevant. So let's just high level go through the Geelong area. Now, one thing that I wanted to actually do is, if you are not familiar with an area at all, what you do is you just go to Australia. Okay, we go to Australia, and if you want to know where the top regional hubs are for that place, and you have no idea, like, I want to invest in Victoria, but I don't know where locations are. If you just keep zooming, let me just try and do this. You can see the key markets get started to pull through. So you can see that there's Geelong, Warrnambool, Traralgon, Bendigo, Shepparton. These are all regional hubs. You keep going further in, Bendigo opens up. We've then got Castlemaine. So that's just a quick little hack, a little Google Maps hack, and you can do it for anywhere.
What's the zoom you need to have it at, Joe?
Whatever zoom is suitable for you. See, Sunshine Coast and Gold Coast are big markets, and then you zoom in, you can start to see Toowoomba, Warwick, Gympie. That starts to open up, and then it starts to open up even further. North Lakes become a big one, Caloundra. So that's just a little hack. Yeah.
The only thing I
Okay.
worry about that is if you go back and zoom out, I noticed that Moranbah is highlighted when you zoomed out, and I mean, shout out to everybody in Moranbah, but that property market was a yeah, so yeah,
It's not the
do
best.
your own,
Yes.
yeah,
It's my little
but
regional hack. It's trying to find some of the top regional hubs, which may be not saying that they're great buying or there's good investing there. Although Bendigo has done sensationally well over the past 2 years, 3 years even, and it continues to grow. So this is Geelong here. This is where we are talking here. Geelong. It is what we want to do is understand the distance to Melbourne. Melbourne. It is. How much is it? What is it? Oh,
I think 80 Ks, isn't it? 80 to 100. You got to do directions, Joe.
Melbourne to Geelong. It is a 1 hour drive. They also have Avalon Airport here. One thing to note about Geelong as well is it's pretty well established too. So it's very much a major hub of its own. You don't need to, it's not a small regional location. So there's a lot of flight from Melbourne to some regional hubs. We saw a lot in Shepparton. We've seen some in Traralgon. We've seen some in Bendigo. We've seen all of these people leave, and they want to leave to more lifestyle locations. And Geelong is definitely gentrifying a lot. It's had a bit of a poor reputation, but as we'll see, it's starting to really tick up. So what are we talking about here? We're talking about supply and demand. So from a data perspective, that's what we want to identify is, does this market have more demand or more supply than it can soak up? It's the basics of economics. One thing I like to talk to as well is filtering. You can see he's changing his filter. Thought that was cute. There are 15,353 suburbs in Australia. 3,800 of those have reliable data. You then filter that across your budget. So how much have you actually got to spend? Have you got $400,000 to $500,000 to spend? Great. That is, where you do it. And then you run across your analysis.
That particular slide and those numbers are new to me, Joe. And I'm asking the question, the audience is probably thinking, reliable data. What does reliable? What do you mean by reliable data?
So if there's enough sales, if there's enough information to actually be able to see a trend. So there is some here, for instance, auction clearance rates for the DSR data, which is a platform we'll talk about. There's no reliable data here because there wasn't enough auctions in that area. So we couldn't say that auctions are a good indicator for Geelong, if that makes sense, because there's so few of them. Yeah, there's so few markets, there's so few properties in Geelong that go to auction, so it's not really auction worthy, if that makes sense, to use that as data. So it's the same type of thing for property. So like when we're talking about our area up here in, all the way, Mungo, there's probably not too much reliable data to be able to say, yes, Mungo's worthwhile investing in, if that makes sense.
If you're from if you're living in Mungo at the moment, give us a shout out, because I'm sure you.
Yeah, please do. Please do, Mungos.
Mungodians.
Mungodians. This is a new slide that I don't think anyone has seen before, but it's one thing that I think I kind of believe in when it comes to property investing. And you'll hear it all the time. There's a lot of people out there in the market that are very data focused. I am very data focused myself, but property is both an art and a science. You use the science side of things to build a hypothesis around what you believe. So we've got to look at the fundamentals of that area. So has it got people there that are, a good, like, is there a good population? We'll talk to the fundamental. Actually, I'll just go to the fundamentals here. No, I won't. Analysis. We then have to look at the data, but we also have to get our boots on the ground. So it's understanding the fundamentals of that area. Is it an area that's growing? Is it expanding? Is the population going up? Is it desirable? Does it have projects and infrastructure going in there? Then the analysis side of things is more of the short-term data. Like, what are the days on markets looking like? Are they trending down? What type of inventory levels have we got there? And then boots on the ground. this is where it becomes the more art side of things, because you have to be able to identify, the areas that the hot spots and also the not spots. And those not spots are the areas to avoid, if that makes sense. And also, one thing to also mention is that when you have a bad area, is it growing? Is it gentrifying and being able to grow in that space? So we're going to be talking to an area called Norlane, which is an area that I've purchased myself and had some really nice results. But let's talk to the rest of the day. Do you want to talk to this slide, Jeff?
Yeah, I definitely can. So what we're going to do, we're going to run this a little bit different. We usually kind of go through it chronologically. Now I think it makes more sense to actually kind of jump to each slide we were talking about. So I think we'll talk to population, and we'll talk about projects and then employment and desirability, but we'll actually show that side of things so you can it visually represents. So this Joe talks about, I suppose, your comparison between demand versus getting soaked up by supply, and you got the sponge analogy there. So I suppose the demand is the liquid or whatever, and then maybe slower. And I don't think this analogy works, but anyway,
essentially,
when you
these are the fundamental drivers of demand. It's like an equation: population plus projects plus employment plus desirability minus supply equals the opportunity. It equals what the value.
I think that's why I was getting a bit confused. I was like, equals? I was like, it's an equation.
Yeah, it's a bit weird, actually.
We're doing algebra. But no, that's all right. It's only our fifth data deep.
It's only our fifth one.
You got this slide right, though.
I got this slide right. Absolutely. This is the analysis side of things. So now we understand the fundamentals. This area is a place to go. It's got the population, it's got the projects, it's got the desirability, it's got the good, diverse employment, and it doesn't have a major supply of stock coming to the market. Then we have some of the key driving indicators of a more of a short-term growth cycle. So we want to see our days on market trending down, our listing prices, trending. We want to see them trending.
Oh, you haven't nailed it yet.
I haven't changed that one. You told me about this last week. Inventory levels flowing down, and then vacancy rates below 2%. Gross yields, whatever you indicate it to be. If you want a higher gross yield, actually, Jeff, you asked me what am I seeing in the market with these new interest rates? What I'm actually seeing is people wanting more cash flow. So I actually can start to see areas that have been more of a focus on cash flow to be a little bit more of a better option for people, right? Like people want more cash flow to support. If rates do rise, I want to make sure that I'm caught up and I'm not going to be in the red, if that makes sense.
How does that? We're going to go a bit ad lib here, because how does that how do you typically go with that conversation? Do you say to people, "Oh, well, actually, we can find these areas," or do you kind of is there a bit of I'm just interested. How do you then sort of deal with that conversation? Because I know how that would.
Yeah, well, no, it goes down to the strategy of what the person wants. Generally speaking, people want to build a large asset base of portfolio. So that's during the accumulation phase where they're trying to build as much as they can growth-wise. So they go to markets that have a higher growth rate. And that is an area that we see Geelong as. So if we look at the Geelong market, actually, this is SQM research. Now, to hit the point, we are going to give you guys all these free assets, and actually one of them's paid, free assets and resources that that you can use to be able to understand a market. But you can see this is Norlane, which is the market that I bought in and I'm talking to, and Jeff is going to talk about Herne Hill. But you can see that the Geelong market has been sustainably growing. It has grown. In the last 10 years, it's grown on average, compounded 8%. Over the last 7, it's grown 11.8%. And the last 3, 12.12% compounded annually. So 8% compound growth over 10 years is absolutely sensational and not to be balked at for sure, because we are mapping our things out at 5%. But yes, if a client wants more cash flow, it needs to factor into their entire goal. We're not going to go ahead and try and buy a 7% yield if they're looking for capital growth. There is always a sacrifice, but it doesn't have to. You can have capital growth and cash flow in one, if that makes sense.
Yeah, I'm trying.
Um,
Oh,
yep.
I didn't actually look at SQM, so but I'll need to get your help with bringing it up for Herne Hill. I don't know if I can talk
Yeah.
about it.
No
I'm
drama.
pretty confident with there, but we'll talk that when we get to it. So should we talk about the Geelong area overall, Joe, and then we can go wide and then we can go narrow. Or before we get to that, you should talk to boots on the ground. I think that's
Exactly.
important
So
as well.
the third pillar is fundamental analysis, understanding the area, which we'll talk to now, analysis, data for the short term, and then boots on the ground is really the key to all of this. If you are buying an investment property, I was talking to a good friend of mine this morning actually, and he's like, I want to buy in this area, but I have no idea about it. I'm like, cool. Well, you've done the research, you've done the analytics, get on a plane and go there. You're going to be spending $800,000. Get your butt on a plane. Take the weekend, have fun with the family, but go and see it, because we've got to confirm what the data is telling you. We are data led, we're data led and scientific, but nothing's perfect. Nothing can predict capital growth. But you confirming that area is where the hot spots and the not spots are, it becomes pretty clear.
And here we go, Geelong. So do you want to speak to Geelong, or do you want me to? You know Geelong.
Yeah.
Right.
Yeah. Just speak to him, mate.
Yeah. So in terms of the spiel there, it says there Geelong's lifestyle is hard to beat. Their football team sort of gets easy to beat sometimes. I mean, the Swannies beaten them a few times, even down at their home ground stadium. So anyway, enough about that. So the thing I remember, I've actually flown. I mean, my experience with Geelong is I've flown into Avalon Airport, and I sort of, my perception originally was it was a decent trip out from Melbourne, but I think driving around, like just seeing that little the bay sort of, or the, I don't know, what do you call it? Is it a bay in Geelong? I think it's a bay.
It's the
Kind of
bay.
like one of those, yeah. Like it actually was quite an impressive city in its own right, and that talks to there. It's not just a one horse town. You got plenty. You got a diverse economy. You've got a cosmopolitan. You got suburbs there that are $1 million plus. So you have plenty of investment. You have beaches. So I didn't go to the Geelong beach, but I mean, I don't know. Did you? Might be a bit cold. But as it says, their population over 250,000, and it's continuing to grow as well. And I think that we'll talk to some of the projects that are making it even more appealing and even more attractive. So we'll give some of the distractions as well. We're not just kind of pumping up Geelong's tires completely. And there's many. And I think the one thing about Geelong though is there was that Ford factory that closed down. Was that probably 3 or 4 years ago, Joe? Maybe 5 years ago?
I think even I think it was about 4 or 5 years ago now.
And people's kind of, I remember hearing the media and people talking and saying it was almost like as if with the death knell for Geelong. And I don't think I think it was even Cotton On, which sort of, there was some issues with that and they sort of closed it down. But
and then and maybe this is why it was a little bit slower to go, at this point in time, in that 2014-15, and then it started to raise again. The reason for that is what is going on in the area. So Geelong, 75 kilometers northwest of Melbourne, growth area, blah blah blah. Yep, it's there. 2016 Ford closed. Thank you very much. It's a good. So yes, let's talk to the fundamental drivers. So let's talk to some of the projects that are going on in the area. So one of the big ones is 2023, Geelong Fast Rail will deliver faster services between Geelong and Melbourne CBD with travel times around 50 minutes, which is going to be massive. So I currently live in Cronulla. That's where I live. I used to work in the city. I was the head of sales for Australia's largest legal technology company, and I loved the job. But I didn't love waking up into the city every single day because I hate the city. I don't really like cities. I like to wake up on the beach, and it's beautiful here in Cronulla. So what I did is every morning I woke up, I jumped on a train, and in 45 minutes, I would be in the city. So if you can live that type of lifestyle, if you can live a Geelong Beach lifestyle and still earn a massive salary in the city, that is going to drive expensive people to the area, because that is what happens. People are able to go to the city and they're able to work. They're able to earn a larger income, and also work from home. So with the work from home workforce, so that is something that's quite big. That's coming in 2023 as well. Do you want to talk to some of the other stuff, Jeff?
Yeah, I'm going to talk to the project that I'm most excited about. That's the
Which one's that?
GMHBA Stadium. So they call it the Cattery, which I think it just sounds like an interesting name, like the Cattery. But I think it's a 55,000 seater stadium. I don't, correct me if I'm wrong there. Like you can probably Google it, but it's a very intimidating. But just to think of a city that's got 260,000 and they have a stadium of 55,000 people, it just shows that they are. And I mean they're very. I mean in the 2000s they were an impressive force to be reckoned with. But just to think that they're planning that far. I mean, to think the MCG has one of the biggest stadiums in the world has 100,000 capacity, but yet a city with 250,000 has a football stadium of 55,000 capacity. You kind of say it shows to the thinking of the people in the Geelong kind of planning and infrastructure. So it sort of says there they've invested $142 million. Like that is huge. Like how big is like that is. So this shows that they're passionate about their sort of community and their sport and lifestyle as well. So I mean, to me, that's sort of is fantastic. But also the convention centre as well. Which have you visited that one, Joe?
No.
No, you haven't.
No, haven't been there. But yeah, this was a big point on Geelong. These are construction projects valued over $10 million, proposed, approved, and under contract. So what you want to see is these two, both approved and commenced and completed. Well, the completed ones are factored into the price already. So if you look at an investment project or an infrastructure project that has been completed, well, it's already factored in. So you can't really count that towards being valuable for the area. But Geelong has, where is it? $12.7 billion. So they're building a whole heap into roads and transport, which is great for accessibility, desirability, like ease and access in and out of the city, which is going to be the train that we're talking about here. But most importantly as well, they're doing a lot to bring new jobs and new money to the area. So they're doing a lot of public buildings, medical, commercial buildings, industrial, residential buildings to bring more people in, and residential subdivisions and tourism and hospitality. So my favorite, so go to this if you are interested in what projects and infrastructure. We've got it on the slide there. Geelong Data Exchange. It's very good. I wish more locations had that. It breaks it down entirely, breaks it down to where the areas are. Yeah.
That's really cool. Like the one thing I might as well ask the question now, because rather than I didn't consider the flood kind of situation. Are floods a big factor in Geelong? I've never heard really much of flooding in Geelong, but is that an issue you consider?
If you are interested in floods, go to Vic Plan.
Yeah, here we go.
Vic Plan.
On the fly.
Okay. Free site, and this will be able to give you the overview and understanding of, you type in floods, and then you can get your flood zone management for all of Victoria. So this isn't just for Geelong. I think actually you don't click historical. Yeah. Where is, oh God, it's really annoying interface, but hang on.
Looks quite powerful, because you sort of, it's amazing they've got a statewide sort of search.
Yeah. And then you zoom in and you can see. So yeah, it's not one interesting thing about Geelong as well. It's not a mega flood. Where is it? It's not a mega flood zone area, but some areas do. Some areas do flood, so you've got to be aware of that. But one thing also is termites are not a big issue in Geelong. So if you get a pest and building inspection done, you might actually see that it's not a pest and building inspection. It's just a building inspection. And
wow.
Because there's just so few. I was speaking to an inspector about it. He was saying, I see probably 1 in 1,000 properties with termite damage, which is unheard of anywhere else. So it's I think he said very clay-based. No, not clay-based. Maybe clay-based. I don't know. But yes, use this. And then if you've got an address, then you can check that out as well. So if we just type in for 30, 36, just go to 10 Princess Highway. You can pull a property report, and this gives you absolutely everything that you need to know on the area. So it'll say if the area is in a flood zone, what overlay that it has. Environmental audit overlay.
That's super handy, man. Like I wish a lot of other kind of jurisdictions had things. I mean, I know we've looked at Queensland, we've looked at WA as well. So
yeah, yep. Oh shit! I just cut out of it. Hang on.
He's gone to a different presentation, I think. Oh no.
Yeah.
So the thing I love about this is yes we are talking about Geelong, but you can apply all of the research and all the analytics to any area that you're looking to buy in. You can sort of look at the projects, you look at the infrastructure, you look at the employment, and then you look at the analysis as well. So the shorter term type things. So that's, although we are talking, as I said, about Geelong here, I think there's a lot of power in implementing this across. And of course, Joe and I do much more research when we're buying a property than this. But this is some of the first kind of the narrow
high level stuff.
Yeah, high level.
Yeah. One of the big things as well, end of 2022, is they're bringing the Spirit of Tasmania, which usually docks in Melbourne. They're now docking it in Corio Bay. So that little bay in there, that's quite a big one. So now the Spirit of Tasmania, they're going to also build out a little commercial hub in there as well. So it brings jobs and keeps jobs in the area. So let's just kind of breeze through these because, it's pretty boring just watching a slideshow. So population forecast, that is something else you want to look for. The average population growth for areas for Australia is like 0.94%. Population growth is going to grow by 33%. So 2001 to 2041, there is going to be 216,000 people. And also that's going to be a 2% growth per year. Now, David has popped up a little comment here saying, do you have infrastructure spend per person calculation or not relevant? I don't have it right. I don't have it on the top of my head, but yeah, I actually do think that is a worthwhile, because we're talking about infrastructure. We're talking about all these numbers and stuff. And really what you want to do is compare those numbers against each other. So yeah, so what does, 137 projects at, how much was it? 10 billion or 12, sorry, not 10, 12.7 billion. What does that actually mean?
Yeah. And I think to sort of speak to David, I'd want to actually see somebody do it before I started relying on that. I'd want to see research as to what impact it has on property or performance of property, because you can measure any metric under the sun. You could create 1,000 metrics, but if it's not meaningfully moving the needle, then yeah, I don't know how you actually measure that, but it's an interesting question though, for sure.
No, it's a really good point, because it allows you to compare infrastructure projects per person per capita. So there are some locations where they're throwing a heap of money, and I think you'll see that Geelong is up on there. So yeah, David, maybe you want to do that. Do 12.7 billion divided by
170,000
the population. So again, population is continuing to drive. And it's being quite consistent as well. It's consistently grown. They've added 1,700 to 3,600 per year of people. A lot of workers are moving to take advantage of working from home and the more tree change type of deal.
The thing on that slide there that's quite important as well is the type of industries as well, which. Let's just have a look. Major projects. I'll just speak to some of those. If we go back. Yeah. So you sort of say, look, you've got healthcare and social assistance. You've got retail, which I don't necessarily. I mean, retail can be a high paying, but you want to I suppose the key takeaways there is you've got definitely got diverse industries, but you've also got sort of higher paying like healthcare and social assistance plus. Construction is traditionally can be quite high paying. Education, training, quite secure, generally speaking, employment. So I think that's kind of something to take note of.
And then David's popped up here. I think it's around 75,000 per person.
It sounds a lot, but I don't have any benchmarks as to what the national average would be. There you go, David. I've got another project for you. You want to do it across the nation for each year? Maybe not.
The next thing to look for as well is, are people keeping their jobs? Are people taking up jobs? And in December 2001, so this is a little bit of a lag data, but it's been trending down for a little while against the Australian average. In Geelong, unemployment rate is 3.3%. In Australia at the moment is 5.1% based on the December data. So we're in an area that is very well employed because they've got a lot of industry mixed up there.
Yeah, definitely.
And then,
yep.
Do you want to talk to this one, Jeff?
Yeah, I think I mostly did, but just to
Yeah.
reiterate the points, there is a diverse, like you can see there's I think 15 sort of industries, maybe more. It's even interesting. There's mining in there. There's a couple of people that work in mining. I mentioned there's potentially, but you've still got a strong presence of manufacturing there, which is interesting. But you've got education and training, you've got public admin, you've even got professional and technical services. So there is sort of some white collar, a lot of white collar mixed amongst it as well. So I think that's it's quite a strong employment hub by the looks of it, Geelong, and unsurprisingly, given its top 15 population in Australia.
Yeah, and this is what we're looking for. We're looking for diverse employment. Is it a good diverse education and training is a good tick, is a big tick. Healthcare and social assistance, government jobs, consistent pay. It's not the highest earning pay, but it's consistent and it's 100% needed. So these type of things, education, training, construction, manufacturing, are all good jobs to have. Retail trade is good to have, but it's not like it's not as high value as some of these other ones. But it's good to see they're up there. Now, what are some of the downsides? So desirability is one of the downsides that we're looking for in Geelong. It has had a bit of a bad reputation in the past couple of years for being a little bit of a rougher area. So some things to be aware of is there's a high rate of low income households. Victorian average is 18.3. In some pockets of Norlane, it's 52%. So there is a lot more under income people in those type of areas. So you got to factor that in as well.
And I think as well, the other a comment somebody popped in is about swampy land. I think I wouldn't necessarily say completely swampy, but there is that element. There is land. There is some potential supply in some of the Armstrongs, to some extent Lara. So you look on the outskirts, and yes, there is potential farmland, and there's those newer estates. So it's something to take note of. You don't necessarily just want to say yes, there's a lot of people moving to the area, but you want to understand the potential supply that could come on the market, and really research and understand that as well.
Yeah, you need to understand what is coming to the market. So some of the areas to be aware of that are starting to get built out is in the St Albans area. We are starting to get built out around here as well. So you can start to see new estates getting built up. So here, look at this, all up along here. New estates are getting built up. So would I be buying, this property here or this property here? Probably not. But in areas where there's a lot of demand, which we're going to talk to. So you're going to talk to Herne Hill. There's Hamlin Heights, which is a very good location. Bellpost Hill. There's not much more you can build into these areas. You can't just cut anything up because it's all taken up. So the supply side of things is getting quite tight. That makes sense.
Yeah. Yep.
What else have we got? Desirability, we can talk to that. Data. I think that's okay. What's this, Jeff?
Oh, well, this is I mean, when I was looking at this, because we sort of started playing this about a week and a half ago. So the way my initial kind of process of doing this was super high level. Look at the data points, as in your suburb finder, suburb trends, based on your budget. But then, similar to what Joe's doing now, just do a Google map. Like, I really love to understand, given I've not traveled a lot to Geelong, I'm not a local, so I like to understand. I actually looked at all the suburbs in the area and looked at, well, what pockets are there that are a little bit cheaper and what are more expensive. So where are people wanting to live? So I wanted to understand that and talk to there about oversupply of new land, and then consider surrounding areas where there is potential, where there's more expensive, such as Manifold Heights is one of those, and that sort of goes closer to the city, East Geelong and all that. And then start to do a deeper dive, which is sort of what we've started to do now. And after that, do a boots on the ground kind of thing, just like Joe. Verify, if you can't get there yourself, you have to verify with a couple of PMs, property managers, to help you out along the way. So anything you'd like to add to that?
Yeah, well, we've got amazing property managers in this group. And yeah, you do have to get out there. Like, it doesn't take much. I was in Geelong last week, and you just have to get on a plane and do it. It's a couple of $100. You're investing hundreds and hundreds of thousands of dollars. So I always recommend just doing it, because it's going to help you out. But do speak to property managers. Do speak to people that are on the ground. The reason why we speak to property managers is because their incentives are more aligned with your incentives. They're more likely to want to say, you know what, actually, yeah, I wouldn't be buying in this area, because if you get the listing, if you give me that listing, it's going to be a hell for me to try and rent that out. So what we've done next, we are going to do a data deep dive into the specific areas that we have chosen. So I have chosen Norlane, and Jeff has chosen Herne Hill. Now, why have I chosen Norlane? Is because I own a property in Norlane. I wanted to quickly cover off my little project in Norlane. So I bought this property for $310,000 in November 2019. One thing, actually, this was a presentation. This was part of another presentation, so it's kind of all mixed in. But I bought it for $310,000 on the contract. But then I didn't actually see the property first. I didn't have time. I was negotiating incredibly quickly. I got the property under contract with a 14-day pest and building clause built in. So I said, look, I'll buy the property. I can see that there's some issues, but I'll buy it. I went there. Under contract, it means that the vendor couldn't pull out, but I could pull out if I want to. So I had the leverage and I had the control. So don't feel that just because you haven't seen the property in face-to-face, you can't put an offer on, because if you're not making offers, you're not making money. So I threw the offer at $310,000. Now, when I went there, I was like, oh my gosh, this place is falling apart. And that's probably a pretty good statement of what this property was doing. So what I said is, look, I'm going to pay land value only. I can only pay $280,000, and negotiated with them, and they accepted $280,000. But what that means was we adjusted the price on at settlement. So instead of the bank giving me $280,000 loan, they gave me as if it was a $310,000 loan, and I had a $30,000 adjustment. That $30,000 adjustment paid for my renovation, because I got that $30,000 in cash. That renovation cost $22,000. It was revalued at $360,000, which is $80,000 in equity, which shows you the value of renovation. $80,000, bloody well done. The most important thing, though, I think that people miss out on when with renovations, is that they work really well. They give you that instant equity, but what works in property is holding it for the long term. I bought this property for $280,000. It's now worth $550,000, which is $270,000 worth of equity. So I thought I'd just share that little story.
What's it renting for? Are we renting for 400, 450, or maybe not?
I think it's like 380. I think it was 300 when I had it, when I first got it.
Increase the rent, show. What are we doing? Oh,
well,
is that not where?
It's demand led. It's demand led. Oh, yeah, it's demand led price rise. So that's one thing to be aware of. Where the value is I bought this in 2019, and I bought in a growth location where the data was saying I should be buying. And I guess that's one of the points as well to talk about. What we are talking about here is that, let me go to the data, is if you've got the fundamentals, the analysis tells you the time period of when you can be buying. And these two really help you understand what to buy, like, is it a good location to buy in, and what's actually on the ground. But the analysis is what tells us when to jump into that market. So we can start to look at some of the research here. So I bought in 2019 where they were showing some half decent signs. Where did I buy? November 2019. Okay. November 2019. And it went from 360 to 550. Well, for me it was, because it's a 3 better. Any questions on that reno project at all? Like, I feel like everyone loves a reno.
What kind of what would you like to know? I mean, I feel there's been a few posts float around, but for those who haven't seen it, would you what would you like to ask Joe live about that particular renovation? But perhaps ask those questions, and once we're back from our we'll pop into some of those questions. What do you reckon, Joe? Because otherwise, I think once we get into
the meat and potatoes, you're right. Herne Hill, Jeff. What the hell is Herne Hill?
Should we? Because I feel if we get into this, we won't get to the ad till way into the piece. Because I'll go on a soliloquy. We're already at an hour, Joe.
We don't want you having a soliloquy, because we don't want to clean up that mess. So let's jump into our ad, and then we'll jump straight into why are we going to be buying in Herne Hill or Norlane. Let's do it.
Selling a property, it isn't something we do every single day. There's actually more involved in the process than you may initially think. Like, how do you find the best agent? How do you ensure that you're going to pay the lowest fees? It's not easy, and then also throw in all the stress and pressure of selling. And that's why Scott Agate, a former real estate agent and expert property negotiator from Hello House, has created his leading agent finder service. After a 20-year career managing agents himself, Scott has personally conducted over 3,000 property transactions, along with running 3 Bell franchises. He knows all these agent tricks. Scott has created an in-depth 5-step process for his leading agent finder service. First, he establishes the true market value for your property. He uses a triangulation method to shortlist the leading agents, creates a competitive environment for those agents to send through their best proposals, vets those proposals, and then he negotiates the best agent fees for you. This ensures that you're not only getting the best rate for selling, but most importantly, you have a leading agent on your side selling your property to maximize the end sale value. Oh, and did I mention this service is completely free? If you'd like to know exactly how Scott runs his 5-step leading agent finder service, he's detailed it with the link below. Or if you'd like to speak with Scott to help find you the leading agent in your area, book a call today.
Yeah, man. Should we? There's been some pretty interesting questions. Should we? Let's tackle those. Otherwise, I feel the moment will be lost. I can speak about Herne Hill, of course, but somebody wants to know: how did you manage the reno interstate? That's a great question. Didn't you travel there?
I did. I traveled there. Yeah. So I did the renovation from November over to Christmas, and then finished it in January. At the same time. What renovations did you do in the Geelong property? Great question. I'll answer that. And I was actually not interstate. I was on the other side of the world in the UK, where I was managing the property renovation. So over Christmas I went to the UK. So I was completely managing it, very remote. What I did is set it up. I had a project manager. It was a guy that I found on Airtasker. And said, I will pay you $25 or $20 an hour. And can you just let the trades in and do all of that stuff? And if they need you, they'll do it. And he was super friendly, super nice guy. So he kind of managed it. Now, it was a cheaper renovation. It was a $22,000 renovation. We got the ceiling removed. Oh gosh, now we got to remember. I got the floor sanded and we painted all, there you go. There's the new one. We painted all the walls. We ripped all the wallpaper off and sanded the floors. We painted the cabinets, but we didn't replace them. We didn't put a new kitchen on. We put a new bench top on. And I don't even think we changed the door handles. We should have changed the door handles, but we didn't. That bathroom renovation was already complete. So that was a massive plus. But the thing is, it was the ugliest property. And there was no emotional element to it. So that's why I was able to negotiate so well. Yeah.
Somebody was asking any surprises. I think there was there one surprise? Did somebody steal? Was that the other reno you did?
No, they stole heaps of stuff. So this has a funny story attached. The ceiling. I called up a Slovakian guy and said, "Hey mate, can you quote me on a ceiling?" And he's like, "Yeah, I'll bring my guy out and he'll go quote you." So he comes down. He's like, "Yep, that'll be $6,000." I'm like, "No, I'm not doing $6,000. That's silly." He's like, "Okay, no worries." Anyway, the next morning I wake up and all of my ceiling is totally removed. It looks exactly like this. He then said, "Oh, well, I've removed it. We may as well just do the job." And there was a big, scary altercation where I didn't pay him for the job. I paid the laborer there who ripped it down. But that was a big surprise. Someone breaking into my house, tearing out the ceiling, and starting to do some work on it. That was a big surprise. Also, one of the stumps on the property was broken. So out the front, I actually might have some pictures that I can share that might give a little bit more context if people are interested. I don't know. I feel like we're going down. If I go down this path, it's going to be a bit more of a longer conversation.
That's all right. That's all right.
Okay.
Go for it.
Well,
I think the questions are absolutely flooding in. Somebody wants to know Haley said wants to know, how did you actually do that whole cash? I think it was, was it your broker who helped you organize that? Or what was the actual, because
it was both. It's
on
the broker.
completion valuation, was it? Is that what you did? No, not on completion.
How did you still get 310 for your Norlane property? I'm actually doing that for a client right now. I just don't know the correct wording of it. Speak to your what are they called? Conveyancer. And this is why you have a good team. The conveyancer that I used is the conveyancer that I have for my team because they're amazing. So we want to make sure it's reconciled at settlement and the updated contract doesn't need to be sent. So it's not updating on the contract, it's getting reconciled. So speak to your broker about that and your conveyancer.
You're doing some numbers, are you, Joe? What are you?
No, I'm just going to try and bring up some of the pictures.
Broke some questions. I'm actually looking at data on the fly to just see. It's interesting because it's sort of if you look at SQ&M, it includes.
Would you want to share your screen?
No, that's all right. I'm hopping around, so otherwise we'll end up. I can share if you want, but yeah, why not? Let's do it. As to the reason why I selected this. If you want me, I'll share it now. Just let me know when you got those. You're still looking for those things, are you, Joe?
Yeah.
Okay. Well, while Joe is getting up his details, so the area I looked at, and Joe will talk to why he what he likes about Corio, but I'm purely going to talk about mostly Herne Hill. So I looked at all, as I said, I looked at all the suburbs in Geelong and just sort of said, well, there are a couple that I didn't mind the look of, but I like a bit of more of a capital growth kind of play rather than a cash flow. Because if you're looking for cash flow, Herne Hill is going to not be so great on the hip pockets. I think it's the gross yields of somewhere between 3 and 3.5%. But the thing I did like about it is you're in somewhat close here to Geelong, and you're in East Geelong, and these are the more affluent. So there's the university, Deakin University. You've got the Geelong waterfront, the hotels, the fancy hotels, and the beautiful thing is the Manifold Heights, which if we, I think the median for this one is touching $1 million. Whereas Herne Hill is and medians are flawed because there's not necessarily a lot of stock that sells. But Herne Hill is around the mid to low to mid eights. So I like to say that there is people that get price out of somewhere like a Manifold Heights. Again, they're going to consider, well, I still want to live in close to where all the action is happening. There's opportunities in areas like your Hamlin Heights and your Herne Hill. And the thing you want to be careful of is just understanding, and if we go into layers, you see what I'm speaking about. Is there is a lot of, I don't know what this land represents, but you'd want to, I know there's a quarry here, but you want to understand, well, can this land actually So because if you're buying, let's just say you buy right on the edge here, is there going to be a whole bunch of, even if you buy sort of further in, are you going to then sort of, so that's one of the cons that you've even got Metricon right in Fryansford over there. So you sort of say, yes, is there a potential for more properties to be built? But if you're looking sort of closer to where, and you're going to pay more for it. But that's what I liked about the area. If we look at I'll stop sharing now because Joe's probably got your details up, Joe.
Yeah, we'll give it a shot. Trying to find the old photos. Okay. Yeah, I'll just show you the old photos. Essentially, this renovation was completed. Yeah.
Can't believe you haven't got the photos.
I have the photos. I just don't really want to share the address on.
Yeah, okay.
Everyone. I don't know why. I feel like it's probably not a smart move.
No, probably not.
But my computer's gone super slow. Anyway, so apologies. Now, Joe, forget concerned about using cheap tradies or unlicensed tradies. Yeah, so that's a good question. So, Joe, are you concerned about using cheap tradies and cheap people? Absolutely, yeah. You kind of have to be a little bit concerned about doing that type of stuff. But for me, this was trying to be done on the cheap. So I did a lot of the work myself. I stripped a lot of the paint work. I did a whole heap of work myself, and I did it the old school way where you've got to put the sweat equity in. So let's have a look here. This is the property. Now, these are the old property photos on the place, the property called, what's it bloody called? RP Data. I use it every single day. Now, one thing that I really liked about this property is the precedence that's already set for a subdivision. So this property here and this property, actually it's this property here now as well, just got subdivided. So this property has subdivision potential. So the value of this is twofold. I have a renovation project that I'm able to where did you live during the reno? In the property on a blow up mattress from Kmart.
Somebody said they know where it is. Jeez, Joe.
I don't.
They also own in Corio as well.
Oh, legend. Good on them. I bet they've done well. It's pretty obvious. Actually, all of this, see, this is that Ford factory that we were talking about here. This is where I believe this is where the Spirit of Tasmania will be coming in. And then there's a massive Bunnings right here, which definitely helped. There's also a new community center and healthcare precinct getting set up over here too, which is going to bring a whole heap of jobs. But let's have a look at the before pictures.
It's on a main road though, Joe. Or how main
yes,
is that
actually,
road?
Yes, actually, that's a very good point. So that was a concern of mine as well when purchasing. I generally don't buy on the main road because of noise pollution that is going to eke into your property. So for this one, if we have a look, there's a bit of a lay-by area here. We can't zoom any further, but this is kind of cut out a little bit. So it's not directly super duper on the main road. It's got a little bit of a lay-by area coming in. So that kind of the pros outweighed the cons for this particular property. But this was it before. So totally original. And you can already see the ceiling is busted. So all of that ceiling has all corroded. Pop down, have a look out back. And you can start to see here, some things that you can't see in the pictures is there's a lot of water damage in here and up here. There's a lot of cracks along here.
Look at that ceiling as well. Jeez, that's an ugly ceiling. Wow.
It's ugly, but it's also bowed as well. It's all pure water damage. And beautiful carpet there. Everything was from when it was built. It was built in 1955. The bathroom was fully renovated and updated. So they've already spent $20,000-$30,000 on a bathroom for me, maybe 20. And you can see that it's an older person. It was a deceased estate. So this is what originally it looked like. So it's ugly. So this is what we would classify as an ugly duckling. Where the value comes in is when you start to look at the floor plan. So here, it's not a big house. It's definitely not a big house. But what I was able to do is turn this lounge room here, that massive lounge room that you saw here, into, oh, I'm going the wrong way, into a third bedroom. So all of a sudden, if we go to domain, and this is actually what we were talking to before, suburb profiles. You go to the area. Actually, this is a perfect example. So we go to Norlane now. One thing you want to look for is a bit of an arbitrage, where the purchase price of one product is very, very different to the next product. So we can see in Norlane, when I was buying, the purchase price between a 2-bedroom is $450,000 and a 3-bedroom is $475,000. So that is what, $24,000 difference. When I was buying, it wasn't that small. It was massive. It was like, you
could probably look it up, couldn't you? You probably, you
I don't know, going back that far.
Yeah.
But all of a sudden, if you add a third bedroom, RP data is going to look at that. And when the banks do a valuation, they're going to say, yeah, well, that's a 3-bedroom property. And then this is all I did. I ripped all the carpets up. I painted the walls. I stripped all of the 1950s wallpaper off, which takes an unbelievable amount of time. I put a $1,500 wall up here. I put an air conditioner in here, a new one, an air conditioner in here, and then I put a little bench top up here. I was going to knock down this little outhouse here and have a little entertaining area, but I found asbestos, so I decided against it. That was a mistake because getting removal of asbestos costs money, and you need to just know how much it costs. I ignored how much it costs. I didn't think. I'm like, oh, I've got asbestos. I have to leave it and I can't touch it. In actual fact, you could remove it and just pay $5,000 to get it all done, which would have added an outdoor entertaining area, which would have helped my purchase price. It would have helped me go a little bit better. And there you can see I can have a big enough, wide enough driveway to be able to put a property in the back. This property is exactly the same. If you now go to the area, you'll see that it's been subdivided. You've kept the front house. And
damn it! So somebody else already did it. You didn't. I was going to say that would be one of my questions. Like, could you have you thought about knocking on the neighbor's door and just saying, "Hey, look, I own this property. I'd be keen to. Would you be keen to consider offers?"
Yeah, I don't care about this guy. I was more interested about this guy, and I did the exactly that. I went to the next door neighbor. I'm like, "Hey, I just moved here. I'm an investor. I'd love to buy this." He's like, "I'm going to die in this house," and I'm like,
"Cool."
Okay,
when you do pass away,
he was like 50 years old, so I'm like, oh, we got some time.
Playing a long game.
Anyway, that is and then that's not the house.
So tell us about Corio, man. The data deep dive.
Well, when mine's not on Corio, mine's on Norlane.
Sorry, yeah. Right next door.
Okay, cool. So this is where we get into. Actually, let's go to SQM Researcher. So SQM Research is a free platform that a lot of people use for a lot of their data. So it gives you a really good understanding of where property prices are. Again, it's a very stable and secure market, but it also gives you the long-term average, the short-terms, and all of that. Some things to look out for is the stock. Joe, the money machine. Right. There are... so this here is total property listings and days on market. So go to SQM Research, click property listings, and it allows you to fluctuate in and out and see what's going on in the market. So what we can see currently is that days on market has been trending low. You can start to see that that properties over 180 days on the market are very, very low. So that's a good sign. There's not a lot of properties that are on the market for that long.
And there's not a lot for 90 to 180 either, which and even pretty. I mean, which is not surprising. It wouldn't surprise me if you see this across a lot of markets.
Yeah, exactly. You start like in so it's starting to trend down, which is good. Property listings, get rid of units because this is not a market for units. So we don't care about that. We can start to see listing volumes are starting to trend down as well.
Yeah. The thing, because I was looking at the post thing to be mindful of. I don't know if it's the case for Norlane and Corio because I think they're both lumped into the 3214. when you're looking at this, because when I was looking at Herne Hill and Manifold Heights, it's all under the same postcode. So if you went to 3218, you'll actually see there was a significant spike, and go to the listing price or asking price, not so much the stock.
asking price.
Yeah, asking sale. Asking, and look at all houses.
Yeah. Okay. So
yeah, so and that's because the reason why that probably is the case is because Manifold, because they're both lumped under the same postcode. So
okay.
Manifold, so basically, and that's where I'm sort of seeing potential opportunity, because if 10 properties sold in Manifold Heights, that's going to obviously increase that listing price. So it looks quite volatile. But what I suspect is happening is just more properties are sold from one suburb. So that's an interesting. That's what I was thinking arbitrage. I was saying Herne Hill potentially, if you could buy just on the border, people say, well, I'm practically, it's just interesting.
Let's see if there's any kind of property. There you go. See if you can get a There you go, 2-bedroom at 650,000. If you can find a 2-bedder that you can turn into a 3-bedder. What
about a 3 into 4? I mean, there's not a lot of 4-bedders, I suppose. That's the only thing.
Well, look at the sale. Like, look at what the sales volume is. You're trying to. I mean, if you can get a 3-bedder into a 4, that works as well. But a 2 to a 3, as long as there's a little bit more space in it.
That's $120,000, $111,000.
$111. Yeah.
That's
so. It's not bad. Average days on market. So we're talking about days on market now, 27 days, which is incredibly, incredibly low. It's almost as low as you can get. Like, it's around 20 days on market is where it kind of levels to a point where, well, it's got to get listed, it's got to get offers, it's got to get exchange.
Because how much would a conversion from a 2? I mean, obviously it depends, but generally from your experience, what would it cost to convert a 2 to a 3?
Well, one thing that you need to factor in is that you need to replace something. If you take something, you have to replace something. So I built a little bit of it. I took away half the living room, so I had to give a little living space in the kitchen. So I put a breakfast bar out there. So all in all, a wall is the cheapest thing ever. It was $1,500. A wall, plaster, and also I got a discount because the roofers were there and they were doing the plaster, and like, yeah, sure, we'll just plaster it.
I mean, it would have to sort of match the, like, you obviously if you then got a tiny living area, it's not gonna work. Like, it has to still be a functional kind of property. You can't just do it in anyone. It has to make sense.
Yeah, and also Herne Hill is a very nice location. It's a very it's a nice little location. So you want to make sure that the demographic that would buy it is buying it. Norlane is not a nice location. So when we start to talk to, did I make any slides about like demographic and stuff like that? One of the things to look for is suburb trends. So is that what it's called? No. What's
microburbs?
Microburbs.
Yeah. The microburbs data on Herne Hill was amazing. The one key downside is, look, the cash flow is not great. So it's going to, particularly with rising interest rates. So look, you have to make sure, speak to your broker, speak to all those people, and just understand if you can continue to hold such property, particularly if rates increase or continue to increase.
Yeah, and just so, oh gosh, what are we looking for? Family score, affluence score. Okay, we're going to look for public housing.
Almost zero.
Almost zero. So this is generally the price you can expect, like the price points and things. I don't know why this is totally empty.
Probably industrial, isn't it? Which suburb is that? Maybe it's just a data black spot.
Data black spot. It's not selected. Okay, and then we go to, so one of the key things that you want to look for microburbs is the affluence score, and you want to look at public housing. Now, there is a correlation between purchase price and public housing, and Norlane and Corio are the more affordable locations within these suburbs. So that is one thing to factor in. And the place that I purchased would have been, it's in an area with 67%. What is it? 67%.
It'd be interesting because I think this is still 2016 data. So I'd like to see what it would.
Public
Do you think
housing.
is there still a good amount of public housing, or given you've just been there?
Yes. Yeah. There is still a large amount of public housing. One thing that we mentioned in our slides is that the government, the city of Geelong, understands that. They understand that Corio and Norlane and Whittington are a little bit underserved of a community, and they want to gentrify it a little bit. So it's good that the government the council is on top of it and they can identify that. But as you were saying, Jeff, your property here for earning over public housing, you've got all blue. So 0 public housing up into these areas. So these
lots
are
lots of cafes, lots of like I mean, I picked, I wouldn't say premium area. I picked a higher, a more capital growth focus. Not to say that you can guarantee capital growth. So yeah, was
so
just a
long term, and really it's kind of talking to those arbitrage opportunities that we're talking about. So if you can, these areas here, what's the yield on the Herne Hill?
It was roughly about 3 to 3.5. So yeah, whereas yours
wouldn't be 3.5.
Wouldn't
it? Would be like 3. No, you'd be hard pressed to get 3.5, I imagine.
I'm going to pick up a bargain because Well, I think what is it? What is it? 450 a week on. Let's say we buy something for 700, which I'm dreaming, but let's say if it's 750, let's say 2.5, maybe 3%, pushing it.
Yeah.
Are we going to bring up the? Are we going to bring up the deal crunch calc? Can we do the deal crunch for your property, or have you got something up your sleeve to share, or what? I think people want to see the deal crunch calculator in action?
You can if they want. Yeah, they can if they want. I feel like I've lost where I was at. So lifestyle score, it doesn't have a high lifestyle score. So Corio and Norlane are pockets that don't have a high lifestyle score. Now, one thing to be aware of is West Geelong is echoing, Jeff, I think.
Is it? No. Yeah, people are saying yes. I shouldn't have mentioned the deal crunch calc, because now we'll have to be like a 3-hour session. So David asked, does microbrews use ABS data? I believe so. So it's going to, as I said, it's likely 2016 data.
Yeah. What you can do is estimate. There's the Sydney Morning Herald did a little article.
Yeah, going through the dark cabinets of Joe's internet. Geez, I hope he hasn't looked at anything he shouldn't know, or not shouldn't be.
But... Okay, hang on. I'm just thinking. I know just some locations are going to come up. I'm going to give away the goods.
Don't worry about the location. Let's just the other sites that you've been looking at recently. Not that I know.
No.
I haven't been tracking Joe's.
Yes, there is. So.
It's only
something
Sydney,
going on, Jeff. But can you reset your audio or something? I'm echoing.
Okay, maybe it's you. Probably not. Yeah, because I think
Okay.
Is that better?
Okay. So the new ABS data is out for 2021. We all signed the little bits of paper. They are staggering the release of the data out, but the majority of it's out. So they've got a new search bar that allows you to check the areas, so you can compare the data. You obviously normally have the ABS stats, but I thought this was a much cuter way to look at it. So you can, and home ownership, and see how this has changed. The best way to really view it, if you're into the data side of things, is go to ABS stats.
Yeah, is that better, Joe? I think it is a little bit.
Hope so. Yeah, that's better.
Sweet, just added tone. Yeah.
Go to ABS quick stats.
Yeah, that's what I'm doing tonight after this session. Looking all of that. So people wanted to see the deal crunch, but maybe we don't need to see it. Sorry, I should put you on the spot, Joe.
Okay. Well, No, there's a property on the market that I think is actually worthwhile buying at the moment.
Ooh.
Yeah. oh. There is a place that I think would be worth considering an investment for someone that is looking for. So we're talking about this area here. Now, this is Norlane again. This is a property that is currently on the market that people can go out there and buy. So there are some areas, this area here is known as the bird cage. So the reason it's called the bird cage is because it's called Finch Street, J Street, and Rosella Crescent, Dove Street, Swallow, Bellbird. They're named that. So one thing you do have to think about when you're buying is identifying the hot spots and the not spots. And again, that is just getting boots on the ground. The only way to do it. So when you actually have to just drive through the streets and see, hey, what's going on, speak to property managers, get property agents to drive you around and just check them all out. West Norlane. So Norlane. So this area over here, Hamlin Heights, Herne Hill, this is a very prestigious. There's a whole heap of schools along here. And this drives a whole heap. A lot of owner occupiers around this Bellpost Hill and Bell Park. And this West Geelong area is starting to get soaked up into that as well. So you're starting to see these areas are becoming a little bit more gentrified. So literally there's a train line, I think, along here. So it's literally the other side of the tracks.
Like the wrong side.
Norlane is literally the other side of the tracks, but West Norlane is becoming more and more gentrified. So is this maybe an area to consider? That is entirely up to you to judge. But this is a property that is on the market right now. Why do I like it? Because again, it's got that subdivision potential. It's
Karen Court,
11 Karen Court. So currently 550,000 to 600,000. You can fit another property. Now, this is not financial advice. This is not property advice. I actually haven't done the full due diligence overview. I haven't checked.
Not town planning advice. Yeah.
I haven't done town planning on it. But this is a nice little set and forget property. It's got a full renovation in the bathroom. It's got a full renovation in the kitchen. It is perfectly rentable, and you should be able to get rent.
It's too nice, Joe. Needs to be, yeah. But I like that you picked one that you don't have to do a reno on.
Well, a lot of people, I mean, I work with a lot of clients, and I expected them to wanted to do the renovations and do the sweat equity, but flying down to Geelong and sleeping on an air mattress and getting into arguments with Slovakians about the roof is probably not the ideal situation. Now that I'm, have a little bit less time, what happened, right? What was the value of my property purchase? I purchased it for $280,000. I spent $22,000 on the renovation, and I revalued it $360,000, make it $80,000. That's an amazing deal, but the true value was picking a good area, and this had the growth. So you don't necessarily have to do a full-scale renovation. If someone's already done that renovation for you, they've taken the property from, they've spent $50,000 on it, so they deserve $550,000 because the renovation's been done already, if that makes sense.
Yeah.
So maybe you could buy this property for, $500,000, and then you spend the $50,000 and you'll be able to sell it for more. But this is the property that I would be having a conversation with the agent, because right now it's absolutely fine. It's got a great little renovation. You get a tenant in there ASAP, no problems. Probably be about 420, 450 maybe in rent. And it's just a little set and forget until you want to do exactly what I want to do. Subdivide, split, keep the front, knock the back. If you didn't have to have if you didn't have to do the reno, then what would have been the property price in 2019?
In the one you bought in Corio, what were they roughly selling for a renovated property?
Well, 360. So yeah, I would have bought it for 360. Yeah. Yeah, actually, this is a good indicator. Like, this is pretty much my property, right? Except this one's nicer than mine. My renovation was not as nice as this. Yeah, so go ahead, call up Shari tomorrow. Say good day, Shari.
We should be getting a sponsorship from Shari on this one. I mean, geez, he's going to get a lot of inquiries potentially. Are people going to But what's with that? Yeah, have you got the? I'd be keen to see what the numbers look like from
Oh, the deal crunch. Oh, sorry. Yeah.
Why not?
Okay, cool. So one thing to realize now is if we have a look at SQM data, we go to something called vacancy rates. We go to yields. Where's yields? Gross rental yield. Now, as property prices grow, the yields compress. So 3%. So it's a bit of a challenging market for someone that is wanting a super cash flow positive property. That's one thing to think about. So this is really good for like SQM. What is your minimum yield? What is your minimum yield requirement? So if we go to somewhere like
You're looking. I think you're looking at Herne Hill, by the way, man. I don't think you're
oh,
not
okay.
looking at. Yeah, that's why it's low. That's why I told you it's about 3%.
Yeah, you're spot on. Yeah, okay. I was thinking, I swear I didn't buy it at a 3% yield. I thought it was a lot more than that.
This is live TV.
Yeah. So 2019, that's December 2018. So I bought it at a 4% yield, 4.5, 4.2. But as the prices have gone up, the yields have compressed and they're starting to
rise quickly.
The rents haven't been able to keep up.
Come down quite a lot, hasn't it?
Come down quite a lot. So if you are thinking about investing in this area, it's not a cash flow positive area. So if we look at the Principal's Deal Crunch calculator, when I bought this thing for $280,000 and it was revalued at $360,000, I used a 20% deposit. I got I won't worry about the price reduction. Renovation, I spent $22,000 and I got $300. I think it was $300 a week rent. So it's cash flow positive $2,000 a year. It was on a gross 5.6% yield at $280,000. So if it was 360, which is the true value, which I would have purchased it at, it would have been negative $1,128,000 because I put more money into it, if that makes sense. This is the Deal Crunch calculator. This is free for everyone, by the way. So if anyone doesn't have this and they want it, Jeff, do you want to post the link in the group for the Principal's calculator?
From the newsletter though, or is that where we?
It's in the newsletter. Yeah, just the newsletter will link. So this is where it becomes a little bit challenging, and that's in SA. So we've got it factored in there for Victoria. But if we were to buy this Karen Court one, let's just say it's $550,000. And we don't need to spend any money on a renovation, and we are getting $450 a week rent. It's not really. It's only $2,000 a year negative cash flow. So it's not actually that bad. It might be 430. It's $3,000 a year negative cash flow, which works out to be $250 a month.
The question that somebody asked a really good question, and keep talking about. Have you really gotten into a deep dive on Norlane, or we've skirted around it, but I think we've covered it quite well. But somebody asked a cracking question on my. It was on my post, and they said something about how do you find cash flow positive properties. They said they're finding it quite hard to do so. The question was great. They worded it much better than what I just said. I'm just trying to find it. I'm scrolling through the group now. But
okay. Well, this is how you find the Deal Crunch calculator. You go to propertyinvesting.com. Jeff will share the link soon, and then just scroll down, and we've got called the Ultimate Deal Crunch calculator. I don't even know where the hell it is. Top. The Ultimate Portfolio Tracker, the Ultimate Deal Crunch calculator. Scroll down to the bottom, click on to get the spreadsheet, and then there you get the spreadsheet. You hit copy, and you're good to go.
Putting a link in now. There you go.
So how do you find cash flow positive properties? It's actually a little bit harder than like to actually do it free. It's a little bit difficult. Really, you need to get some data and go through and calculate it. This platform here is called Suburb Trends. We've spoken about this a lot. It used to have something called cash flow clusters, but it looks like he's removed it from it. So apologies. Yeah, he's removed it. Yeah, he's removed it. But that would give you a bit of an indication around that. Market property data. But yeah, what you would do is then type in, your area that you're looking for. So if we go to places in Adelaide, very high rate, very good rental yields from there. Yeah. Cool. Any questions?
Yeah, I'm sure there's going to be heaps of questions. Like, it doesn't have to be about necessarily Joe's calculator. It can be about generally what people are thinking about, or it can be interest rate related. Can't say we'll have an amazing academic answer on the spot, but yeah, I've popped some questions. I'm keen to. Well, the question I'll be keen to ask you, Joe, is what are you sort of like? I know you sort of a lot of this is your secret herbs and spices, but what do you sort of say? Because Brisbane was has been the darling of the market over the last 12 or 18 months. What are you sort of seeing in some of those kind of areas that you were looking? Are you kind of seeing that it's starting to get a little bit easier to buy, and maybe you're not sort of buying as much up there anymore, or what are you?
It just gets like when a market gets incredibly hot, it becomes very difficult to buy there, and it naturally starts to kind of peter out. So when the competition is incredibly tight, so that's what we try and do. Like if we have a look here, so talking about like a bit of an opportunity here. When I was buying in October, July, so the data, if it went back even further, days on market, there was an opportunity here. You can see an opportunity kind of creating itself here. These are the days on market. We can see that they were dropping down, and in Norlane, they are now back down. Online people are interested about it. Online search interest is up. So that window might be there again. And you can see that from November, it kept pushing up. And then from that, the purchase price, where is purchase price?
Interestingly, though, the days on market didn't drop that much, even though it actually kind of like was flatlining basically for that whole time.
Yeah, exactly. So I was buying based on this data, seeing that this data was doing quite well. So I don't think I timed the market perfectly when I bought in Norlane, but it was still basing off of that decision, being like, okay, cool. The market has been tight. Now I'm going to get in and then it overlays over the top of what you're talking about here with the fundamentals. Is it still an area to buy? What's the analysis saying for you to be able to buy it at the moment? And what locations are you actually going to buy those places in?
Yeah. Yep. Well, I'd love to answer any questions. So throw them in the box, people, if they be about Geelong, because I think and just even looking at here we go. Why did you can't make money out of a unit? Well, I mean, it's not that you can't. I don't think did. I say that? Did you say that, Joe?
I didn't say that.
I didn't think I said it either. I think you said that it wasn't. I think we said it was a unit. I think you said it wasn't a unit market. So that's not to say.
That's a very good question, actually. Yeah. So yes, with that, that's actually a really good point. So thank you for bringing that up. I did say that. I take it back. I said that. What we want to do is buy the product that is in that market. So if we go to Norlane, for instance, what is selling, right? What has the volume of sales to be allowing us to get into a high demand product? So we can see here that Norlane has sold this year 14 units, but they sell a boatload of 2 bedrooms and 3 bedroom homes. So would I want to buy a product that isn't actually moving? I don't want to be involved in this ship. I don't want to be on this 2 bedroom unit ship because there just isn't enough of them. 3 bedroom ships, there's only one that's sold. So what you want to do is try and buy in with all the other owner occupiers, because owner occupiers are what drives the value and what drives the growth. And if you're purchasing a property where they're in, you're going to get that emotional premium. So that this Karen Street is going to drive.
Illustrate. Oh, go on. Sorry.
Going to drive an emotional premium because it's a beautiful home. I have a 3 bedroom home in Norlane, and it's going to get driven up by that. But if if there's not many sales for 2-bedroom units, it's probably not really going to be a market that's going to do it. I'm not saying that you can't. So if we go to Bondi.
Oh yeah, I was going to say even go to something like maybe, I don't know, Manly. Is it
Right.
Manly or
The Bondi has
only selling units.
Only selling units. So I'm not saying that you can't make money out of houses. It's definitely a different market for the lower end stuff. For the higher end stuff, it's a very, very different way of not a very different way of investing.
Might need to add a few zeros to my income before I'm buying in Bondi, but yeah, let's see how we go.
So this is where I would be playing in this market. I don't care what the asset is. Like if they're selling sandcastles and people want to rent a sandcastle, I'll buy sandcastles if that's what people want and that's what people are transacting.
I saw a sandcastle for 300,000 in Sydney last week. Yeah, it was a pretty best sandcastle on the worst street, worst sandcastle. Yeah, anyway, Dave has asked an interesting question as well. Any thoughts on granny flats?
What are your thoughts, Jeff?
My thoughts are they have a role to play. I think there's certainly cons, and I sort of. I mean, the big cons are your resale value, because I even see around my area, there's ones that there's probably, I wouldn't say there's heaps of granny flats, but there's definitely quite a number of them. And even in Western Sydney, in the sort of the Penriths, the Mount Druitts, the St. Mary's, those kind of Western Suburbs area, there was a lot of granny flats built, and cash flow or the yield is probably sort of 7 or 8% gross, or was sort of rough at a time. The problem is, though, when you go to sell it, the only person or the main people that are going to buy it are an investor or a larger family. So you typically, you sort of, particularly in a slower market, if you need to offload when it's not so hot, it's going to take 100 or 70, 80, 90, 100, 150 days to sell, whatever it takes to sell. It's like those big kind of sort of five units on one, or not one tile, but 5 units, like whole unit blocks. Some of those can take sort of 6 months to a year to sell, but the cash flow on those is fantastic. But nobody wants 5 units or 6 or 7 or 8, 10 years or whatever. What are your thoughts, Joe? Probably similar, but
yeah. I mean, I think in a higher interest rate environment, it's definitely worth considering. You know, if you can get that extra cash flow. I was looking at I purchased a property a couple of months ago with a granny flat on it because the client needed that extra bit of cash flow and yield to be able to get into the next property, because that was what's going to allow them to borrow some more. So it's all a part of a bigger strategy. So if there's already a house, if there's already a granny flat built on it, yeah, I'll buy it for sure, because it's that extra income. Now you just have to be careful of the state that you're buying it in and understanding the rules and regulations around it. So in South Australia, for instance, you can't rent out a granny flat. You can't rent out a house and another granny flat on a separate lease. On 2 separate leases. It has to be on one lease per entire house. So that doesn't allow you to have 2 separate leases, which doesn't allow you to get 2 separate incomes. It just means that one person lives in this house and then they get the value and benefit of a granny flat, where it's like, oh, that doesn't really help me out too much because I'm not maximizing that value and that rent. My thoughts are, if you can't subdivide and split the land up and you're looking for a long-term hold and you want that cash flow, then yeah, I would, pop a granny flat up. A little bit challenging at the moment because it's so expensive to build.
Construction costs. Yeah, I was going to say, because they're probably going up for granny flats.
Someone's just said it in 4 words, 2 numbers, 2 words that I couldn't say in 1,000 by the sounds of things. Yes, 1 title, 1 lease.
Thanks, Sophie.
Thanks, Sophie. The general demographics support such builds. Yeah, I think the areas where the granny flats are being built, the general demographics support such builds. There you go. And then there are some locations where you're allowed to have 2 separate leases and it works absolutely perfectly. So yeah, I'm definitely not against granny flats. If it works, if the cash flow, if you can pay for it and it covers itself in cash flow and you're holding it for the long term. For my property, I was thinking, do I need a granny flat? But by the time I built a granny flat, I should have just subdivided and put a house in it and then sold and then had the 2 lots built. So if you can't do that, then heck, throw a granny flat up there if the numbers make sense.
So what are people's thoughts on our dive into Geelong? Did you love it? Did you have any questions or feedback as to what things you would love to have seen more of or less of? Maybe the economic talk up front was a little dry. Maybe I needed to work on my delivery. But yeah, any kind of comments or questions on that? I'd love to hear it. And whilst we're sort of we probably have time for another one or two questions. We can. Have you got any questions for me, Joe? Or I don't have heaps of questions for you, but any topics you think we should talk about now?
I just think the key is just get out to the market, chat to some of the experts that are in the area, and see where you should be considering. Geelong's a definite market to be looking into. I'm not saying you should be buying. We're not saying you should be buying in Herne Hill. I'm currently buying in the Geelong market. I'm not saying I'm buying in Herne Hill. I'm not saying that I'm buying in Norlane, but I do think that there are a lot of opportunities in some of the less not fully gentrified areas. Do you still buy reno houses? Yeah, absolutely. I just don't know if I'll be doing as much in them. I don't think I'm going to buy and just live in it for a couple of days, buying the old
maybe we should do one, Joe. Maybe we should do a project where you. I mean, I don't know. We have to talk about it off there, but I'm putting you on the spot here. But yeah, and we should record that. Would people love to see us? I mean, it could be the end of Ozprop. We might end up. I mean, might not talk to each other after the reno, after Joe, after I pick up a hammer or a paintbrush. It could be property of yours.
Share your story, Jeff. We need a little Jeff story.
I certainly could. I mean, I've shared sprinkles of it. I haven't done I have done a reno, but my one was a specific. Yeah, I could tell. It's too painful because mine was a joint venture sale that is now worth an extra 200,000 or 300,000 more. So I kind of don't want to. I don't want to think about it. It's too painful. But that was just
so the reno didn't necessarily make any money, and then you flipped it. And then didn't hold it.
Yeah, we overcap. Yeah, so I can tell. Yeah, I'm happy to sort of. I mean, I've made money on a development. Actually, I could run for that. That's. I mean, it depends on because what if people get more value? Do they get value in where there's a success story or something where you learn lessons? I mean, I could do both. I suppose. I've made money and I haven't made money. Love to see a reno video. Oh, geez, that's scary.
Yeah, everyone, of course, that would be awesome. Okay, cool. Well. I think okay, that's a wrap. That makes sense.
I think it is. If there's one burning question anybody has, like you don't like Joe is a busy guy. To get a hold of Joe, he's bloody tough, even as a co-founder of the group. So if you want to ask Joe a question now, this guy usually probably even me, I'm probably tougher to get a hold of than Joe. But Joe, speaking of that, if people want to get a hold of you, what is the best way? Like, bring up any story will be a good story, Jeff. I can tell you a funny story. Yeah,
that's cute.
What's the best way to contact or speak to Joe?
Reach out to me. Well, as a part of this business is Property Principles. We buy investment grade properties for everyday people. We buy renovating projects. We buy non-renovated projects. If you want to have a chat, I work with a very few select. I only work with 5 to 8 clients at a time, because that's how you're going to deliver good results. So just book a consultation, and we'll have a chat, and we'll see if there's a fit. If we want to work together, I'm kind of at the threshold of clients at the moment. I've got too many clients. So this Wednesday night is a bit of a break from talking about property. No. But yeah, if you're interested in the Geelong market, it's well worth looking into. I'm not necessarily saying Norlane's the top spot to be buying in. Corio, those type of areas. There are a lot of pockets within there that you need to avoid, for sure. But yeah, happy to have a chat with anyone that can be bothered doing that. But Jeff, I think this was a good session. I think I'd actually really love to hear about your development project. You and I haven't even really spoken about the details of that.
Yeah, definitely. I mean, I'd have to. Yeah, I could put it all together. It was. Oh yeah, I wouldn't say that's another painful one, but we did make a good amount of money on that. I think we made in the couple hundred thousands on it. So it's not it wasn't a bad one, but I just yeah, I'd love to keep some more of these projects, because just what those properties would rent for now, based on how much equity we also would have created. It's scary, just knowing how well that particular part of Adelaide. But yeah, I could do a mask. I wouldn't say mask custom development, but yeah, let's.
Well, I think it would be interesting to understand how you set the joint venture up, who was responsible for what, how you even got to that, because like your first deal was a joint venture, and yeah, I think it's well worthwhile.
Here we go. This is probably. Can we speak about this one quickly, Joe? If you had $700K to buy, where would you buy it? Geez, I don't like I don't necessarily like being put on the spot like this, because I haven't thought about it. I
had to bring the question up, Jeff.
Oh no,
you control the questions, my man.
I want you to answer it, and then I can have some time to think about it.
Well, my answer is I don't know. It depends. It depends on who you are, what you're trying to do, where you are in your portfolio, and what you're trying to get out of it. Do you need a high cash flow? Do you need a yield? What are you trying to do? Like the first part is just sitting down and assessing where you're at. Like I like to say, we try and understand where you are and where you're going to go, and then we build the bridge to kind of get there with a bit of a plan. And then we use, an online tool that allows you to map that strategy out, and then it's just not static. When you do that thing, when you've got that, 4% yield and 5% growth, what you then factor that property in, and then it allows you to rejig and redo it again, because that property might actually be a 7% growth and a 4% yield. And it says, okay, well, now you're ready to go again in this year. So it really depends up to you. You need to have, that's why we have, as a part of our business, a property plan, because you need to know what the plan is. You need to know what the strategy is.
Yeah. Well, we actually
not the answer people wanted.
I was when I thought about this question, I'm thinking about where I'm not buying, which is actually the other way of, because everybody says like, hey, where do I buy? I've got this budget, and I think, okay, well, because for me, you can't. It's unlikely you're going to get an investment grade property in Sydney. So Sydney's out. Brisbane, I'm going to be stretching. You could. There are parts like maybe Logan, but is Logan it's seen significant growth. Ipswich Toowoomba, maybe 700K. I think you could sort of investigate other areas. So I'd sort of rule out certain areas. And in Tassie or Hobart, I think unless you really have a unique skill set in that, I thought there was opportunity. I wouldn't necessarily say 100% Geelong, but because I'd need to do more research. Because even Adelaide's seeing significant growth. So you sort of say, well, is it? Yeah, I mean, it depends on what your time frame is as well. Like if somebody had a time frame of they wanted to make money in 3 to 5 years, I think a location like Adelaide, you're going to start to see some struggle. You're going to see it's going to start to sort of, the growth isn't going to continue at the pace that it has done so. So yeah, that's my War and Peace answer to your 700K question. Sydney, probably no. Brisbane, I'd be thinking about again. Geelong, I'd want to dive into that area a little bit more. I've seen Joe's pointed out a bit of arbitrage opportunity. So that's if you could find the right property, but you got to be patient, because if you want to make money, if you just go to the first property you look at for 700K, I think you're going to be probably making a mistake, because you need to really understand that market. Just for me, throwing out a suburb for 700K is not really probably going to help. I haven't. So that's my answer. It's a good question.
Yeah, I don't agree that there's not going to be much growth in the Adelaide market. We still got it's still going very strong, and
but let's say so. It's seen 30+% the last sort of 12, 15 months.
But everything's seen 30%. Everything.
Well, Sydney hasn't seen that much. Sydney's lucky to seen 12, and yeah. So
but it's off a different base, right? Yeah. Like it's easy to go from 400 to 500 than it is to go to 1 million to whatever the comparison percentage is, or 5 million to the next one up.
Let's just say I'll be very cautious in Adelaide. I'm not gonna FUD the fear, uncertainty, doubt the Adelaide market, but I was looking at it back in 2019, and I was already starting to see green shoots then. So it's seen a good amount of growth. I would just but yeah, I'm sure you've got some data points as well. So, what do you think about equity being built on reducing the loan versus equity versus growth? I did it once. You think at this climate it will succeed again? Equity, reducing the loan versus equity from growth. I mean, why not both? What's the why are we? And again, if you're doing interest only, if that's a part of your strategy, then it is only being built from capital growth. So I don't. I think it's potentially harder. What are your thoughts on that, Joe? You're buying a lot more property than I am at the moment.
I don't really understand the question. I feel like it's should I be paying down debt at the moment, and waiting for growth? I don't think the market really cares what your financial situation is. So if you want to pay down debt and it's time for you to pay down debt, then do it. The market's going to grow as the market grows. It's not going to. Those two are not going to be like it's not. Yeah, I don't know. They're not. The market doesn't mind. I would factor it in. Do I want to buy again? Do I need to buy again? Do I have a deposit to go again? Do I have the equity to go again? And how do I get that next property to be able to do that?
Oh, that's an interesting one. But geez, the questions are really flowing in now. Joe's got to get to bed.
For people not set up for developing and subdividing, does the land size matter? Yes, size matters for subdivision. Now in Adelaide, they have a blanket rule generally. So the government has taken over what they can do. So they've got some rules around subdivision. They have a minimum lot size for a 1 into 2 in general neighborhood of 600 square meters and a minimum frontage of 18 square meters. There needs to be no significant trees on the property. In Victoria, the subdivision is a little bit more. So that's easy, right? Oh, I can get a 601 square meter block, 600 square meter block. I can split it down the middle, knock the house down and do that. In Victoria, it's a little bit different. There needs to be whatever, I forgot what it's called. It's a green space area. So to be able to fit a property on the back is not necessarily, there needs to be enough width in the driveway, which I believe to be 4 meters. And then there needs to be enough back where you can put a house, but also have green space at the front and the back and also places to park. If the property is considered a 2-bedroom, you don't have to get an extra car parking space on the front. If it's considered a 3-bedroom, you have to accommodate that car. So it gets so much more complicated in Victoria than it does in Adelaide. So if you're thinking about subdivision, to get your head around it, I'd probably learn the Adelaide way first if you're buying in Adelaide, which apparently Jeff says don't. I say do, because there are pockets. It's just like everything.
I mean, markets have been markets. It's like people saying, it's like me again saying Hobart is not, or Tasmania. I'm sure there's great potential in Hobart, but I think generally, yeah, that's what my observation has been, particularly given, so I think that this question though is about, does it actually matter as much? If you're not going to do it, then why? Then I mean, it's not. I don't need to say.
Sorry, here I am just banging on about developments. For people not,
I was like, just let it go on.
For people not developing, does land size matter? Yeah, it does. You don't want to, if you're not going to develop, you don't need 1,500. You don't need a 1,500 meter block. Get a 500 or 400. I would also just remember, in general, land appreciates. So land is the thing that grows. The value of Herne Hill is bigger. Like what were we looking at? A median price of 500 to 550 in Norlane, and in Herne Hill it is
800, 850,
750, 800. So if you own 400 square meters here and 400 square meters here, this is more valuable. If you own 300 square meters here and 400 square meters, there's going to be a point where I don't really need to. Sorry, that didn't really make any sense. Essentially, you don't want to go too low. You don't want to have these super skinny blocks, because you've got to think about resale, and then the house is really nice on it, but it's super small, and the value of the area. You've got a house next door that's 800 square meters that could technically fit 2 houses on it, but it grows a lot more because you have the house.
Yeah, and
Land
I think
appreciates.
I think the reason where I think the times where it can matter a little more, even if you're not developing on something, is if that market really is a family-driven market. Like if I've got two kids and I've got a pet, I'm I don't really want to. I may not want a 400 square meter block. I may want a 600, 700. So you can play cricket out the back, or you can kick the footy, or whatever it is, kick the soccer ball. You put the basketball hoop up. I mean, you can put the basketball hoop on the thing. But I think that's so it kind of depends on your target demographic in the market that you're buying in, which is where you get experts on the ground like Joe, and you get property managers as well who can kind of understand the types of tenants and owner occupiers.
Yeah, absolutely. Because that's a big point of it is you want to set your property up so it hits the right tenant and it hits the right demographic. So like buying a unit in Geelong is not a good idea. But buying a unit in Bondi is probably a pretty good idea. But yeah, just don't go
renting.
Yeah, a couple of things to check on that you'd want to check is just check easements if you are developing. Check if there's any easements on the property or any big trees, Adelaide they call them significant trees, so you just want to watch out for that.
And crossovers as well. There's setbacks and all that good stuff as well.
Yep. Well, we've been on here for 2 hours. We've been having a bit of a yarn, Jeff. I think that was a good little rundown. I think Geelong is a market to consider. And if anyone has any questions, reach out to us on the group. If you have any recommendations of how to make these little sessions better, we would love to hear from you. Thank you for taking the time and being on here. And if you get any questions, reach out.
Definitely, yeah. Chat. Let's. Thanks, Joe, for doing a lot. You did a bit of research. I know you were sort of hammering and did a whole bunch of research as well. So appreciate you and picking this and even going to Geelong as well. Good on you.
There you go.
Where am I going to send Joe next? Maybe to Tassie. Probably not.
Exactly. Where are you going to send me next, Jeff? Might be back in Adelaide, I think. Heard there's good buying down there, Jeff.
Yeah.
Okay. Let's go buy a property. See you later.
Thanks,
Bye-bye.
everybody.